In India, the Reserve Bank of India, RBI, is responsible for printing currency notes. However, the government of India is responsible for minting coins. The RBI prints currency notes based on the economic needs of the country, in accordance with the guidelines and limits set by the government. Printed money is used to facilitate transactions and serve as a medium of exchange within the economy. Here's how it typically gets used. 1. Circulation. Printed money is distributed to commercial banks and financial institutions through the Reserve Bank of India, RBI. These banks then provide cash to the public through ATMs, bank branches, and other means. 2. Transactions. People use this money to buy goods and services, pay for utilities, and conduct various financial transactions. 3. Savings. Individuals and businesses may also hold on to cash as savings, either in physical form or deposited in bank accounts. 4. Investment. Money can be invested in various financial instruments, such as stocks, bonds, and real estate. 5. Lending and borrowing. Banks use deposited money to lend to businesses and individuals, facilitating economic growth through loans and credit. 6. Reserves. Some of the money remains in banks as reserves, ensuring liquidity and stability in the financial system. The Reserve Bank of India, RBI, does not directly pay interest to the general public. Instead, the RBI influences interest rates in the economy through its monetary policy tools. Here are some key points regarding interest rates in India. 1. Repo rate. The repo rate is the rate at which the RBI lends money to commercial banks. Changes in the repo rate influence the interest rates that banks charge their customers. When the RBI increases the repo rate, borrowing becomes more expensive for banks, which typically leads to higher interest rates for consumers and businesses. 2. Reverse repo rate. The reverse repo rate is the rate at which the RBI borrows money from commercial banks. This rate is typically lower than the repo rate and helps the RBI control liquidity in the banking system. 3. Bank interest rates. Commercial banks set their interest rates for savings accounts, fixed deposits, and loans based on various factors, including the repo rate, market conditions, and their own financial needs. The interest rates paid to customers on savings and fixed deposits vary across different banks and financial institutions. As of the latest monetary policy, the repo rate and reverse repo rate are subject to change periodically based on economic conditions. To get the most current interest rates, it's advisable to refer to the latest RBI monetary policy statements or official announcements. The Reserve Bank of India, RBI, uses the interest earned from its operations to cover its expenses, maintain reserves, and generate a surplus. Here's a breakdown of what happens to the interest earned by the RBI. Use of interest earned. 1. Operational costs. The interest earned helps cover the operational costs of the RBI, including salaries, administrative expenses, and other expenditures necessary for the functioning of the central bank. 2. Reserve maintenance. A portion of the earnings is kept as reserves to ensure financial stability and to manage any contingencies or economic shocks. 3. Surplus transfer. After accounting for operational costs and reserves, the remaining surplus is transferred to the Government of India. Ownership and profit. Profit of the RBI. The profit generated by the RBI includes the interest earned from its assets, fees, and other income sources. After deducting expenses and maintaining necessary reserves, the surplus profit is transferred to the government. Government of India. The RBI is wholly owned by the Government of India. Thus, the ultimate beneficiary of the RBI's profits is the government. Transfer of surplus. The transfer of surplus from the RBI to the Government of India is done annually. This surplus is an important source of non-tax revenue for the government and is used to finance various public expenditures. Ownership. The Reserve Bank of India is fully owned by the Government of India. This means the government holds all the shares of the RBI and exercises control over its functioning and policy decisions through various statutory and administrative mechanisms. The Reserve Bank of India, RBI, does not directly pay interest to the general public. Instead, it sets the policy rates that influence interest rates in the broader economy. As of March 2023, the key rates set by